Welcome back, everybody. This is Money Mondays, and I'm here with my co-host. Where is this guy? Ferris. Why is he always bailing on me? No, anyway, Ferris is out today, but as we've told you guys in the past, we're going to stay consistent with our show. So come rain or shine or sickness or vacation, whatever it might be, one of us is going to be here to be your host of Money Mondays, and we do this every Monday at 3:30 p.m. Central Standard Time. Or 3:30-ish. It might be a minute or two late. But we're talking about the biggest mistakes of our real estate investing careers. And oh my gosh, I've probably made every single one of them. But, you know, we can talk about a myriad of things. This is probably like a two-part series, to be honest with you. But I'm going to kind of blow through some of the ones that, you know, we've had some challenges on and give you guys some examples. Because ultimately, what I'm trying to do with today's show is to allow you guys to avoid some of the mistakes that me and Ferris have made over our careers, right? And this is even prior to Disrupt Equity. You know, whenever I was starting off and I did my own multifamily stuff, you know, I made all kinds of mistakes, right? But you just have to continue to course correct, learn from those mistakes, and then keep moving forward. A lot of people get jammed up, and a lot of people, they can't even start off in multifamily and actually make an offer because they have this analysis of paralysis of there's all these things that are going to potentially go wrong. Let me give you guys a little bit of feedback. It doesn't always go down like that. Most of the time, if out of the 5 tragic things that you think might happen, maybe one of them actually happens over the course of the time. And again, there's ways to mitigate that, right? So, getting right into this. First question is, what are the biggest mistakes you have made during your real estate investment career? This is not in an order of importance, right? But these are important things that you guys need to take into consideration because I have made some big mistakes along these same lines, right? Picking the right lender, right? And I'll get into an example here. You know, being properly insured. And I'll give another example of that. Having the right partners, you know, whether it be deal partners or just, you know, partners in general, right? It's important, right? And then I think ultimately not underestimating the amount of work that it goes into actually doing the things that we do, which is raising a lot of equity and how much time that takes to build those relationships. I think in a lot of ways, people are coming off of a 3-day boot camp or a 2-day seminar. They get excited. Maybe they're part of a group and you're seeing some of the people that have been in the group for a while. They're doing deals. I can do deals. And then you go out and you ultimately get something under contract and then boom, you can't raise the money. Then you're glomming this person and that person together, and that ultimately can lead to disaster because, again, you're not supposed to be doing it that way. You're supposed to be structuring this stuff up front. Everybody needs to have a job within the GP, and it can't just be raising equity. And then ultimately, you know, maybe then you slam pref equity on top of it, and then the whole thing just starts kind of collapsing in on itself, right? And then it's real hard to kind of justify to your investors that they're going to be making the returns that you've kind of pitched them along the way. So I'm not underestimating the amount of time that it takes to build up a following, build up rapport with people, build up some trust, and, you know, ultimately build that relationship with your equity investors. That takes time. So don't just rush into what we do. Build the business and build the foundation the right way, because I think you're going to be a lot happier down the road. You're going to have built that foundation so you can ultimately scale from there. But I'm going to say that one of the biggest challenges that we've ever had, one of the biggest mistakes that we've ever had, is rushing in with a lender that just was not the right lender. Really just not the right lender in general across, doesn't matter what asset class. I would never use them again. I'm not going to mention any names. If you guys want to know who it is, you can ultimately reach out to me directly at ben@disruptequity.com. But this lender was horrible. From the closing process was completely mucked up, no communication, retraded the terms that we were originally proposed. And then ultimately, once we finally got the thing closed, the servicing part of the whole entire process was horrible. So for some of the folks that are starting off, right, you have the closing process, you have your lender, and they're going to give you terms like it's going to be 3.5% interest, and they're going to give you a $10 million loan, and it's going to be 3 years IO. That's one part of the process. The back half of the process is what's called the servicing side. And servicing can be everything from financial reporting back to the lender to the draw process for your CapEx budget, right? These folks were horrible when it came to draws, just horrible. They held up our money for 8 months, and this was on a property that had down units, had a lot of CapEx, And ultimately, it ended up jamming us up. We had to end up stroking a check just to get the work going because we had vendors that needed to get paid. We had units that needed to be turned. And these people were just coming up with every excuse in the book, right? So pick your lenders wisely. Again, folks, referrals, referrals, referrals. We've talked about this many times on the show. You know, the best place to find the best vendors is just to ask around. Who are people using? Who has had a good experience with this lender or not? Don't just go with the first person that can fog a mirror, folks. You need to go with people that you can trust and that ultimately are going to do a good job on the back half of the transaction, right? And then the other part of it was the insurance part. You know, I think that people have a tendency to try to price out the lowest insurance that they possibly can. And I'm only gonna have the bare minimum. Well, guess what? Insurance it's great when you can save some money. Don't get me wrong, we use Strategic Insurance Group and they're great guys. They always save us some money. But at the end of the day, you wanna make sure that you're properly insured. And those guys do a great job of making sure that we're having the right amount of insurance too, right? I'm gonna give you an example. My first deal, and I might have talked about it on the show, or maybe you guys have heard me talk about it on a webinar somewhere else, right? But the property flooded. I had it, luckily we were not in a flood zone, but Hurricane Harvey, a little storm that some of you guys might remember from 2017, blew through and pretty much torched all of Southeast Texas, including Houston. This property was a smaller property called Huntington Park in Beaumont, Texas. We didn't need to have flood insurance. It was not in a flood zone. But guess what? I just, felt like, hey, this is probably the best, thing to do. It's along the coast. Maybe it could flood, who knows, right? And it was $8,000. In the end, that thing paid off $2.1 million in claims, that $8,000 policy. So if I didn't have that and the lender didn't require it, nobody required it. The investors didn't even care if we had it. But us as GPs felt like, hey, to sleep better at night, it was better to make the investment. Property was already very, very profitable and was spitting off enough money. We decided just to go ahead and pay for the $8,000 policy. And it was the best money that I've ever spent my entire career. But just imagine if I didn't. I would be stroking that check out of my own pocket. And guess what, folks? I still don't have $2.1 million. I wish I did, but I don't. And back then, I certainly didn't have it. So it would have pretty much bankrupted us, bankrupted the property. We probably would have had to give it back to the lender, and it would have just been the end of my career at that point on my first deal. So don't underestimate insurance. It's there for a reason. These things happen. Claims happen all the time, and it's just stuff that you can't really control, right? So being underinsured, or I'd say misinsured, right? Having the wrong type of insurance is probably a big mistake that people will make. And, luckily that wasn't really a mistake. That was I got lucky on that one. But just imagine the flip side of that argument and decided, I'm just gonna save the $8,000. It would have been pretty detrimental. So how would you advise other real estate investors to avoid these same mistakes? I would say, again, when it comes to lenders, you're doing your research, you're asking around. There's a lot of forums online, there's stuff on Facebook, LinkedIn, there's these different groups that people are a part of, and you need to ultimately ask, who are the good lenders out there? And some of the ones that are popular doesn't mean they're necessarily good. Again, I'm not gonna name any names on my show, but there's that they constantly get used and nobody ever has a good experience with them. So don't think just because you've heard of a lender and that they'll actually respond to your email that that's the person that you should use, right? You ultimately need to use a mortgage broker. We use Peak Financing, and you need to have them shop the right lenders for that deal. Because again, not only could they do a crappy job, they could just not be the right lender for the deal too, right? There's some lenders that specialize in certain things and are really good at something, and then ultimately you're using some other lender that's not as good, and you're gonna have a bad experience. So ask around. Insurance, understand how the process works, right? You need to understand how insurance as a whole works. What is my deductible? What is the total insurable value but the lender is expecting me to have, right? What's the cost of replacement for that building, right? If the whole thing falls down, right? How much is that gonna cost me to rebuild? And am I insured enough? Right now, the likelihood that the whole damn thing is going to fall down is probably very, very low. But my point is that you need to understand that, right? You need to have a good consultant on your side that's going to show you how to do that, because that's going to help you avoid those things. Going back to the earlier discussion about, well, I haven't mentioned this yet, but business partners too. I think people tend to rush in after a boot camp or a seminar and say, you like Houston, I like Houston too. Let's do a deal together. Guess what, folks? This is like a marriage, and the divorce can be even more messy than a real divorce can be. So you need to vet your potential deal partners. And I'm not even talking about me and Ferris who have created a company behind it, right? I'm talking about the random guy or gal that just partners up on a deal, right? Are you doing a credit and a background check on these folks, right? Do they have any real business acumen or business experience, right? What are the roles going to be? I think the biggest thing that I've seen is there has not been a clear delineation between the different partners on what one person's going to do versus somebody else, who's going to be responsible for this, who's going to be responsible for that, and then it becomes mucked up because these people over here are doing all the work and these people are still splitting it, and then these people start having some resentment, and then things just start kind of going south from there. There's a reason why people talk about fractured partnerships, right? And it's because people get together, they can't make any decisions, they're in some kind of an impasse, and then at the end of the day, it just breaks apart, right? And nobody can even decide if they want to sell the damn thing. So vetting your partners is extremely important, right? And then again, how to avoid the equity trap, right? Where you get into a deal that maybe you're in over your head on, right? Make sure that you are developing those relationships early on. It's the old argument, do you need to get the money before you get the deal? I think they're both equally important, but I've seen too many people rush into a deal and overpay because, trust me folks, the broker doesn't care if you overpay unless you're just a complete yahoo. If you got the gift of gab and you can kind of talk the talk and walk the walk, if you're that high flyer and you're coming in at a high price even over a more seasoned operator, they're going to give you the deal. Right? And then you get into the situation where you're still raising money, way into the deal and after you've even closed, or you don't have enough money to potentially close, then you have to go, pretty much sign away your firstborn to either a private equity company or some other operator that's going to raise the capital for you. And then you're giving up a lot of your GP. So my point is, get those relationships humming. And then once you have a deal, you've already got the equity lined up. Don't underestimate that process. I think people think, oh, I've got a good deal and money's just going to rain from the sky. And if I post it on Facebook, people are just going to invest in my deal. It doesn't work like that. It doesn't even work like that for us. We do not troll for traffic on Facebook. We'll put ads out, but they're very limited in terms of, what kind of, feedback we get on those. Most of those are from relationships that we've developed over years and people that like, know, and trust us and they want to invest in us. So point of all that is make sure you're spending the time to develop those equity relationships, right? All right, next question. How have you kept motivation during adversity and setbacks in your real estate investment journey? Now, I made a little bit of a joke earlier, so I'm going to say it again. Drinking helps, but at the end of the day, you don't want to try to cope with your problems through alcohol, folks. Right? There's my tip for the day. But at the end of the day, I think you have to, just like any other stressful job, you got to take care of yourself, both mentally and physically. You also need to have don't look at it as every challenge or every setback is going to be life-changing, devastating. My family is going to be on the streets. Now, don't get me wrong. There are some things that could be challenging, like we talked about with the $8,000 insurance policy. If I didn't have that, guess who's stroking that check, right? But don't think for a second that there's not risk in what we do. And so you just have to go through and at each point, how do we mitigate the risk, right? You mitigate it through getting good debt on it, having the right capital stack, having the right partners, having the right insurance, right? All of the, and those might be, and having the right property management company. Those 5 things, if you've mitigated nothing else in the process other than that, you're probably you're gonna be all right. Because the market's hot, rents are going up, right? Now, I would say the 6th part of that is to ultimately underwrite the deal properly and have, correct assumptions. But again, if you have the right property management company, you've structured it properly, you've got good debt on it, you got good insurance, you'll probably still be all right. So point being is you can mitigate all of that risk to try to lower that stress level down, but you ultimately got to have that work-life balance. You've got to work out, you got to eat right, and you got to ultimately not let everything, if it's not going to matter in 5 years, then don't spend 5 minutes getting upset about it. And this is coming from an Irish guy that has a temper. I've been able to, say, hey, it's going to be all right. We're going to get through it. And there's been all kinds of setbacks. COVID was very, very challenging for a lot of people in our industry. Nobody really wants to talk about it because it's like the big dark secret. But at the end of the day, a lot of people got crushed. Not crushed in terms of, going out of business crushed, but we lost out on hundreds, if not millions of dollars in lost rent. That was all money that could be going back to our investors, but we had to write a lot of that off. But we had mitigated the risk of the asset by buying it right and structuring the whole thing properly. We were able to make our way through it, right? So those are just some tips, and that's just life tips in general, folks. But I want to stress this one point. What we do is a lot of work, and what we do is extremely stressful. So I cannot stress that enough. So keep that in mind when you're getting into this business. Yes, you can get wealthy, but it's going to take time, and it's going to be a tremendous amount of work. So, tips for bouncing back after failure in the real estate industry. Whew, man, what tips don't I have? I would say that at the end of the day, you have to keep moving forward, right? People have a tendency to stop whenever they have a challenge and not look for the next deal or not look for that next investor because they're so just, focused on trying to solve that one problem. But if you ever want to scale and you ever want to get bigger, you have to always be looking at deals, and that's one tip that we knew. We didn't know going into COVID. We stopped acquisitions for 18 months. It was the worst mistake that we made during COVID. And trust me, we made a few mistakes during COVID, but the worst one was stopping acquisitions because at the end of the day, it's real hard to ramp that back up, folks. You have to redevelop those relationships with the brokers. You have to start the analysis. It's like riding a bike. Yeah, you'll get back on it and you'll figure it out, but it's going to take a little while for you to get going. So I'd say tips for bouncing back is get back on that horse and keep moving forward. That's one of the most important things that you can do as just in general or in life, right? Don't let one tragedy or one setback, dictate how you're going to spend the rest of your life, right? Or, even the rest of the next couple of years, right? So keep moving forward on that. And I think that in general, persevering, even through some challenges or some setbacks. And I think a lot of newbies get kind of caught up in this rat race where, they haven't gotten a deal and they get frustrated. And ultimately they just want to give up. And I say, hey, it's that next day after you want to give up that you have that breakthrough. And so it's important for you to kind of have that and keep that in perspective, right? So lots and lots of mistakes can be made. Like I said, this could be a 3-part series, maybe a 4-part series of how many things that I could talk about that we've done. But I want this to be an interactive show. So if you have any mistakes that you want to let people know about, or maybe how you overcome some mistakes, drop them in the comments. Love to hear what you guys have to say about that, right? So I'm going to stop there. Open Q&A, especially on this topic, is probably very, very important. So we're going to wait for Shanna.
Yeah, we have one. Trevor said, enjoyed Infin last Saturday. See you at the next one.
Thank you, Trevor. We always appreciate you're always very loyal and always come out to a lot of our events. We appreciate that, sir.
Yeah. Great viewership on. So if anybody has any questions, please drop them in the comments below.
Yeah, absolutely. So yeah, keep them coming, folks. I know that this is kind of a hard topic for people to, kind of talk about because again, it's so glamorous, it's all about unit counts and money raised and deals closed. But at the end of the day, you learn the most from your mistakes, not from your successes. And so, I could talk about a myriad of things, from, buying in the wrong markets to picking the wrong management company. I would say that that's probably one of our biggest mistakes. And ultimately what led to us creating our own management company is that I picked the wrong management company, not once, not twice, not 3 times, but 4 times. And after I fired the 4th one, I said, never again, we're starting our own. And that's where Disrupt Management was born. So, I would say management companies are very, very challenged. It's a challenging business. I know this firsthand now, having my own. But you need to be able to pick the right one because there's no thing in that whole entire process that can be more devastating to a deal is having the wrong manager and the wrong regional on there. But if you have the right regional and the right manager on there, you can turn a really, really crummy deal around. So,
do you have any tips for picking the right management company, or
red
flags you've seen of finding out that this was a bad company?
Absolutely, yeah, no, that's a great question too. So, at the end of the day, let's start with the tips, right? And this goes for anything in our business. It's a small world. There's not a lot of multifamily people, believe it or not. you just got to ask around. There's if you go out there and you go to these forums, you start soliciting referrals, you start calling on those companies. Don't just, if 5 people say go to XYZ management company because they're great, doesn't necessarily mean you're going to have a great experience with them either. So you get those referrals though, and then you start doing your own due diligence, right? Start, calling up the principals of the management company, having discussions with them, right? How does their financial reporting process look? How much access do I have to the financials and to my bank accounts? Right? Am I going to have a dedicated regional, or is it going to be shared with somebody else? Like, these are some of the questions that you need to ask, because otherwise you're going to be setting yourself up for failure. Once you get all of those questions answered, though, you need to go look at some of the properties, right? Say, give me 5 properties in the same market, or whatever it might be, 3, it might be 2, who knows, right? But get properties in the market that you're looking to buy in and go shop them. And I'm not talking about just driving around. Yes, you can learn a lot by driving around, but you got to get out. You got to go in that leasing office. You got to act like you're renting a place, and you got to find out throughout that whole entire process, how did they do, right? And then provide that feedback. Maybe there's maybe the leasing person was out that day, or she was sick, or it was a temp, and so there was a bad experience, or maybe they just had some evictions, and that's the reason why there was a lot of trash out that day. Ask those questions back, and then ultimately build a rapport with these folks, right? I mean, these are the biggest part of your process and being successful or not at these properties. Yeah, the lender's your biggest partner, but the property management company is the people on the street, and they're the ones collecting the rents. So take that into consideration when you're looking at that. And I'd say red flags would be, ultimately reviews are kind of a challenging thing for everybody, because nobody leaves a good review unless they're somewhat incentivized. So I kind of discount those even on properties that we look to go buy. I'll take that in, I'll read the comments, and oh, there's roach, plumbing. So then you start having an idea of there's some problems, but I don't take that into consideration as an indictment on the management company, because again, only the people that are pissed off are going to leave a review. But I would say, if they give you 5 properties and each one of them is just a total pile of what, and the leasing experience was horrible, and there was a lot of other just big red flags when you go on site, from trash to shady characters, to broken down vehicles, to gates that are broken, to pretty much everything in between, you're going to ultimately have probably the same experience as that same property and those owners do. So those are big red flags too. And then I'd say, how candid and transparent are they willing to be with clients? There's we've had big management companies, again, I won't mention who they are, but it's like, here's your box. You're staying in that box. I'm not going to do anything custom for you. I'm not going to be flexible. This is the reporting that we do. This is the level of access that we give you. This is how it's going to be. Take it or leave it, right? And maybe that's good for you, right? Just depends on what you're comfortable with. For us, we hated that, right? Because we're kind of on the fly type guys. Sometimes we need to be flexible and customize certain solutions. And these bigger companies were just not getting it done. So maybe that's a big red flag for you. Maybe it's not. I don't know. But something to kind of take into consideration when you're picking a management company.
3 more questions came in. Great insights and shares, Ben. We hopefully learn from our mistakes, but also it's best to learn from the mistakes of others. Have you seen any books or resources that track some shared intel on this?
Not necessarily on mistakes. Again, books are meant to be positive, and so it's always challenging to get anybody to admit any of their mistakes. I wish I could give you some references of some books or even there's probably some good podcasts out there where people might have talked about, some of the challenges that we've even talked about. I think this is a similar talk, but we've probably talked about this on the show in the past too. Yeah. So I would just, solicit feedback for people in the business, right? What was your most challenging deal, and how did you overcome it? Right? I get asked that all the time on the podcast. And I go back to that deal with the lender. That was our most challenging deal operationally as well as with the lender. And I even told this at Infin, right? We stepped on foot on that property, and I witnessed a drug deal. There was a prostitution ring. I was literally walking through the parking lot as a lady threw her trash over the balcony at us, and it exploded right in front of us. We had all kinds of challenging things that happened on that deal, and we had to overcome each and every one of them. And I'm going to tell you, one of the reasons that we were able to do as well as we did on that deal was because we had a good management company in place. They put the right manager for that type of asset on that deal. And he was able to, get the right tenant profile in there and get the bad people out and ultimately manage that whole entire property, and it was great. But yeah, I wish I had a better answer for that. I don't know of any books. I would just check some podcasts. There's probably a lot of good information through that forum.
Jacqueline says, LOL, oh my gosh, on that feedback. 2 more questions. Contractor selection, be super careful. Had
Yes.
A commercial plumber got several thousands of dollars into the project and then he walked. Had to rebid the completion.
Same deal. Funny story. That GC was a complete and total flake. Ended up walking on the deal. We lost 19 grand. He had every excuse in the book, from my wife's leaving me to I'm about to commit suicide. He was literally texting us, I'm about to kill myself. And I'm like, what is going on with this guy? And then we flew out there because we were so scared of what was going down. And he meets us for dinner and takes us out to this 5-star restaurant and then acts like nothing. Everything's good. Everything's good. Yeah. I was just having a bad day. And we walked away and we're like, okay, maybe this guy's got it, but let's start looking for some other options. And lo and behold, within a week, the guy completely pulled all of his crew off, left us holding the bag with $19,000 in work that we had paid for that he did not do. And ultimately, there's not a lot that you can, could I go chase him in court? But it's probably going to cost me 20 grand, folks, to go chase him to get 19 grand back. So, and he knows that, right? Now, if he stiffed me for 100 grand, I probably would have gone after him, but something to kind of take into consideration. So yeah, general contractors are another breed. And again, just like anything else in this business, referrals, you've got to use the right ones.
Another one, exceeded contingency, then stroked a check from my own account, no capital call.
That's what you got to do. You got to do. And I hate to admit it, but hey, we've done that too. We did that on that deal, and we've had to do that on some other deals, right? Because at the end of the day, you're waiting for money to come back from your lender. Maybe it's taking too long. Somebody needs to get paid. Things need to happen, right? That's the one risk that we have in our business. And instead of doing a capital call, the dreaded cash call, right? Me and Ferris and our business partners just stroked a check. And people are going to cringe and say, well, I don't have any money. Well, then you need to make sure that you have partners on that deal that do, and that they are prepared to stroke that check if things do go awry, right? And I've seen people, their first instinct is to knee jerk and ask the investors for money. Trust me, there's no better way to burn a bridge than to come back and tell them, hey, I kind of screwed up, or I didn't anticipate this problem or that problem, and so therefore you need to put more money in the deal. You're going to piss off your investors. In all cases, try to avoid that. Let's get some good questions. Guess everybody has some mistakes, right? I'm not the only one. I think I'm just very, very candid and transparent when it comes to this stuff. Again, everybody likes to talk about their successes. That's the easy stuff, but it's the mistakes that really we learn a lot from. So we're going to move right along. Oh, we're getting on time here. All right. Couldn't be a Money Monday without talking about MFIN, right? We had a great conference. Shannon did a great job. We had over 600 people there the other week. We had some great speakers. We had Tom Wheelwright, Garrett Sutton, Robert Helms, a lot of great panels, and ultimately we're trying to do it all again. This summer, we're still trying to figure it out. I think maybe it's going to be Denver or maybe it's going to be Atlanta. One of the two locations is probably where it's going to be this summer, probably thinking July or August, maybe, possibly.
Up in the air.
It's up in the air.
Is the last day for our pre-registration.
All right, so this is no joke, folks. This is not a sales pitch, even though I used to be a sales guy. Pre-registration sale stops today. Promo ends February 21st. Is it really February 21st? Mm-hmm. Oh my gosh, $200 off. We're not making any money at this price, folks. So this is your best time to get the cheapest price for one of the best conferences that is out there. We are not there to sell you on anything. We're not selling a course. We're just providing content and a great opportunity for you guys to network and maybe meet your next business partner or maybe your next investor, who knows. So check that out at mfinvestornetwork.com. All right, what coupon code are they putting in? Or is it just go ahead?
Just sales.
All right, boom, it just kind of takes itself off, so it makes it easier for you guys. All right, so what's coming up next week? Hopefully my co-host is back. How to syndicate your first deal. Oh my gosh. I will tell you some mistakes on that one too. So we can go through the good, the bad, and the ugly on how to syndicate your first deal. Looking forward to it. Seeing you guys next week on Money Mondays, every Monday at 3:30 p.m. Central Standard. See you then.